Well, let's dive into the implications for the media landscape overall. Mark Douglas is CEO at the media advertising firm Mountain. Mark, you surprised at this?
Actually, a bit. And the reason I say that is normally, what's precipitated this is basically the rise of streaming. But normally, if you own these assets and you want to sell them, it's because you have, content that people don't want to watch on streaming. But I can't remember the last time I asked someone about their television habits and they didn't mention reality shows on Bravo, didn't mention Housewives, or didn't mention, if we're talking business news, didn't mention CNBC. So potentially, I don't see an outright sale of those assets. I can see maybe a licensing of them. In other words, rights for the cable, but Peacock and Comcast retain, those content networks because they drive a massive amount of viewership right now.
Now, I remember, Mark, the private equity playbook of, 20, 30 years ago when it came to newspapers, and a lot of it was, bleed the cash flow out of a thing and don't invest in it. Are we about to see the same thing with cable networks?
Well, yeah, and for two, I don't even think so much the content. You're going to see that. So let's back up. The simple test as to what's going to happen to all of the cable networks is if I ask you the name of one and you can name why you would watch it, they're going to remain. So if I say ESPN, you would say sports. But if I name a name and you can't do that, then they're going to disappear. So if I said ABC, you probably would scratch your head. But if I say Bravo, you're going to say reality, right? And so that's a simple measure. So they're going to be winners and losers. I think Comcast is actually holding a lot of winners, and all the losers, I think, are going to go down this path. They're either going to be, like you said, bought by private equity, or they're going to be sold for the value of their older catalogs, and that's their path.
Anybody powerful, even in the tech space, have an interest here in partnering up, even for an AI point of view?
I don't think on the cable side. What's also interesting is, Comcast owns the actual cables, and those cables are used to distribute content. They're also just used for internet access. And so it's not only the content that has been under threat over cable. I mean, Starlink and other services are starting to threaten the internet access too. So I think something has to happen, and Comcast is getting ahead of it. I don't see that something coming from any of the big tech companies.
What's happening with the advertising market now, and what's the buzz in the industry when it seems to be under pressure, if not in decline? The long tail isn't as long as people hoped. Sure, premium content is great if you have it, but in the middle, it looks like it's rough.
Yeah, two things are happening. Prices on cable are going down. For advertisers, prices on streaming are going up, and more advertisers are coming into the market, meaning small and mid-sized businesses. You're right that the long tail is not huge, but I think that's the future. When I talk to even, executives at your company, talk to people at Peacock, and so forth, they all, and in other firms, all they want to talk about is streaming. And so because prices are going up there, that's where the viewers are. People forget more people watch television a day than use social media. So it's still, and they do it for 3 times longer, 3 hours a day versus an hour a day on social media. So, if you want to reach consumers, television, streaming television in particular now remains the #1 spot, the biggest scale, the most engagement. So I think, long term for all these networks is actually pretty positive if they have a clear reason why you want to go there and be entertained.
I'm a big fan of people watching television. Mark Douglas from Mountain, thank you.